The lockdown looks like it's been extended to the 7th of May, but let's assume that life will be back to something like normal by July. Some sellers will hold back because they aren't able to get what they thought they might have sold for in February, but there will be some who'll give it a go on day one, and of course there'll be some who must sell. Agents refer to the 3Ds, death, debt and divorce, as what drives the market, all of which I'm afraid are likely to be higher by the summer. After lockdown, I expect asking prices will pick up where they were in February, but those buyers who are prepared to commit in the first month may demand a discount for the risk they will perceive they're taking, perhaps 5 or 10%. Most buyers, I expect, will be like rabbits in the headlights and will remain rooted to the spot and will wait. But by October, some savvy sellers will appreciate that whilst they may face getting less for their home than they might have achieved earlier in the year, what they want to buy will be similarly affected. So they'll press on and more stock will come onto the market. The additional supply of properties may give those prepared to move by Christmas some choice, and prices may fluctuate until the bulk of buyers return in sufficient numbers. Buyers usually take about 6 months to regain their mojo after a seismic event, a general election or a referendum. They're torn between putting their lives on hold and risking paying too much for what for most is their biggest single purchase. Confidence takes time to be rebuilt. I don't think we'll see the majority of buyers, therefore, back in the market until the new year. But the biggest question mark remains how much people will be able to borrow and how easily. 70% of buyers need a mortgage, so lending is key. The Office for Budget Responsibility has suggested 2 million unemployed and the economy hit by as much as a third. Thousands will have had their careers interrupted. Many will be looking for new jobs, probably on less attractive terms. Some will have eaten into their deposits to keep going through the lockdown, and many will find credit terms are not as generous. Lenders will have to find ways to judge an applicant's creditworthiness, and whilst in theory they shouldn't, some may look at who took mortgage or rent holidays and judge accordingly. And where will interest rates be? Base rates may be 0.25%, but try finding a mortgage to match. If credit is tighter, prices may sink. The housing market may once again be the subject of dinner party conversation next year, but what people want to buy, where and how much they'll be able to spend remains uncertain. This isn't going to be over quickly, and I expect there will be a full 12 months before we're back to whatever by then we'll be calling normal.